This system is already functioning as core infrastructure. The market just refuses to price it that way. Every day, Solana clears more live transactions than Ethereum. Not in theory, not in benchmarks, in production, under real load, and yet it is still traded like a speculative beta asset. That mismatch is the signal. Solana is not priced like an execution layer, even though it already behaves like one. If your portfolio still frames Solana as a high-speed experiment, that framing is outdated, because this creates a classification problem. Either Solana is already critical execution infrastructure, or the market is collectively misreading live execution data. There is no third option. The counterfactual is simple. Solana is already capacity constrained, not because of future demand, because of demand that already exists. That is why Firedancer exists. Not as a roadmap feature, not as a marketing upgrade, but as an emergency response to success. If this is not infrastructure, then the data has no meaning. Start with what forced its creation. Solana routinely clears transaction volumes that exceed most Layer 1 networks combined. Not during marketing campaigns, not in test environments, but in live production. With bots, with arbitrageurs, with adversarial load competing simultaneously. Firedancer exists because the original Validator client could not safely scale to the activity already present. That is not theoretical dominance. This is operational dominance. Use conservative proxies. Multiple independent dashboards show Solana sustaining transaction counts measured in the tens of millions per day. Ethereum mainnet operates several orders of magnitude lower by count. Solana clears decentralized exchange activity comparable to Ethereum Layer 2 systems combined, while settling on a single base layer, with sub-second finality targets and negligible marginal fees. This is not a performance demo. This is a system under continuous stress. This is not theoretical dominance. This is operational dominance. Now redefine the category. The market treats Solana as a smart contract platform competing with Ethereum narratives. That is a misclassification error. Solana is not competing for settlement ideology. It is competing on execution reality. This is not a Layer 1 war. This is an execution engine war. And Firedancer exists to win it. Firedancer is not an upgrade. It is a second independent validator client, written from scratch, in a different programming language, by a team with deep low-latency systems expertise. Its purpose is not speed marketing. Its purpose is fault isolation, parallelization, deterministic execution under extreme load. That makes Solana structurally unavoidable if current usage persists. Look at where the system is actually used. Not conferences, not governance forums, live trading venues, market makers, arbitrage systems, payment routers, latency-sensitive decentralized finance primitives. These operators choose Solana because execution speed and cost certainty matter more than ideological purity. They cannot tolerate roll-up delays. They cannot tolerate fragmented liquidity. They need a single execution surface. That is what Solana already is. Firedancer reinforces that reality. It removes single client risk. It raises throughput headroom far beyond current peaks. It reduces validator hardware inefficiencies. And it does so without changing the economic surface users already rely on. Hype is absent because operators do not care. Absence of hype is evidence of gravity. Now confront the risks. Centralization risk is real. High-performance execution favors well-capitalized validators with specialized hardware. That narrows the validator set over time. Governance concentration remains unresolved. Solana moves fast. Coordination costs are high. Regulatory exposure exists. A globally accessible, high-throughput execution layer attracts scrutiny once it becomes unavoidable. Architectural fragility is not theoretical. Solana has experienced outages and degraded performance under stress. Firedancer exists because the original architecture hit real limits. Ecosystem narrowness is visible. Solana excels at trading and execution-heavy applications. It lags in slower, composable financial primitives. Ignoring these risks would be irresponsible. And yet the system continues to operate, not because it is loved, because nothing else clears this volume at this speed on a single base layer today, because operators have already built around it, because leaving would increase latency, increase costs, increase operational complexity, because fragmentation is more expensive than concentration for execution workloads. Solana does not survive because it is celebrated. It survives because it is needed. Firedancer intensifies that dependence. Once live at scale. It raises the ceiling so far above competitors that the question is no longer whether Solana can keep up. The question becomes whether any alternative can absorb its displacement if it fails. That is infrastructure risk. That is also infrastructure dominance. Do not confuse this with optimism. Execution engines fall when they fail silently or politically, but markets misprice systems that already carry load. Because narratives lag reality. Solana is already a critical execution surface. Firedancer exists because reality forced its hand. Reassert the thesis plainly. This is not about future throughput. This is about present necessity. Either this infrastructure becomes invisible plumbing that no one thanks, or it fades quietly after already proving the market wrong. If you value deep research like this, subscribe to Crypto Wayfarer, because we are not chasing hype. We are decoding infrastructure. Stay sharp, stay strategic, and keep wayfaring.